Okay, year 11. Welcome to my first attempt at whiteboard animation, and this one has got to do with the recording of cash flows. Basically, we'll be looking at three things. Today, we'll be looking at the cash receipts journal, cash payments journal, and the statement of receipts and payments. Basically, a business will collect all these source documents from their operations. Basically, any transaction that they do, they will have a source document of some description, whether it be a receipt or a check butt or an invoice. Basically, the information gets recorded in the cash receipts or cash payments journal, and then we use the statement of receipts and payments to basically summarise what's in the journals. So basically, we take every transaction that we receive cash for, and we put it into our cash receipts journal. Now, you'll notice that the cash receipts journal will have a variety of columns there. So we've got the date, details, receipt number, bank, fees here, and the sundries and the GST. So, for example, on the 1st of May, if we received fees for $200, oh, hang on a second, just go back there. Okay, so on the 1st of May, we received fees. The receipt number was $321. We received fees for $200, a GST for $20, and see how we total that in the bank account or the bank column. See on the 5th there, we put some capital in, $500. Basically what we do is we total that all up and just remember that information for a little bit later. Next part of the process is we take all our check butts and we use that information to create our cash payments journal. Okay, so you'll notice the cash payments journal has pretty similar columns to the cash receipts journal, except obviously these columns will be, obviously more related to payments rather than receipts. So we see here that on the 1st of May, we had a timber purchase of $500 plus $50 GST. We banked it. It's for check number 567. We also had some drawings there as well. So the information from the cash receipts journal and the cash payments journal go into the statement of receipts and payments. Basically what we do is we total all our cash receipts and we summarise all our cash receipts from the cash receipts journal into the cash receipts section of the statement of receipts and payments. We do the same for our cash payments. So see there the supplies, drawings, GST, and hopefully, fingers crossed, we will have a cash surplus. So here we have $120. Now, how did we calculate that? It was $720 minus the $600, which is the cash payment, and away we go. Now, we add that cash surplus to the bank balance at the start, which we get from the bank statement. So if we add that together, so say for example the bank balance was at $500, we add those two together and we will get the bank balance at the end, which is $620. Now, you might be wondering why I wrote that upside down. Because we are going to be using this figure directly and inputting it directly into the balance sheet. Once we get our balance sheet organised, yep, there we go, perfect. Now this figure goes into our current assets as our cash at bank figure. But hang on a second, what if we're in minus or we had a negative cash at bank? Well then, my friends, it would go into the current liabilities section as a bank overdraft. So there you have it. Thanks for watching.